to read Godwin's profile. I shared this on WhatsApp, and it goes as follows: Dr. Godwin Masuka is a licensed buyer's agent and director at Excel Buyers Agents, where he leads a team focused on helping everyday Australians secure high quality property opportunities. He has deep expertise in market analysis, suburb selection, and investment strategy. He specializes in identifying properties with strong capital growth potential and sustainable rental yields. His approach is highly data-driven with extensive industry networks to streamline the acquisition process and reduce the risk of costly mistakes. So we are genuinely very privileged to have you, Dr. And allow me to state this as well. Dr. Masuka is the husband to Gracious, who was our presenter. I think about a month or 2 months ago, and so we continue benefiting from the good work they've done in this country. So welcome, Dr. Masuka, Dr. Godwin, and we look forward to hearing from you. Welcome. So sorry, you're on mute. You're on mute.
Yeah, thank you. Maybe.
Great. You can all hear me now?
Yeah,
Yes,
loud
we
and
can.
clear.
Awesome. Thank you. Thank you again for the invite, and I appreciate this opportunity to share and to learn together. And thank you, Mr. President and the committee. You are doing a fantastic job. I attended the other event at the other side of the city, which was well attended, and it was a very beautiful evening indeed. I note that the time is about 10 past by my watch, so you let me know when my time is about to finish. But again, just to introduce myself, I'm currently the director at Excel Buyers Agents and also a member of the Real Institute of Victoria and Queensland. A bit of my background. I have a varied background, and some people may wonder why I'm in the property sector. Can you see my video? I seem not to see myself, so I'm not sure. But if you can see
Yeah,
me,
we can
that's
see you.
Yeah,
We
we
can
can
see
see
you.
you. We can see
oh,
you.
that's good.
Yeah.
Yes, so I have a background, a PhD in social sciences from Melbourne Uni. So I came here as an international student, and have done a few things before then, lecturing. Also working in the community sector. I do have quite a lot of experience working in the community sector and volunteering. But over the past few years, I have kind of like reinvented myself and went into a few things, but including the property investment and also starting this business. So we started property investment about 15 years ago. As I started working in 2011, we bought our first property, which we thought was a very good investment. It was in Bentley East. It was a unit. We thought, oh wow, we've done very well, but little did we know that our expectations were not going to be met. I remember that time we actually had another stand that we had deposited in internet. And then we said, no, Bentley is closer to the city and Moorabbin, and then all the infrastructure there. But it was a unit. Fast forward some 10 years later, when we wanted to sell it, it didn't do as well as we'd expected. We actually lost deposit that we'd put in the Thanet stand because we land which had put in the Thanet stand because we didn't want to go with one which we could afford. Then the price back then, you can imagine in 2011 Thanet, there was a lot of farmland and people was, it's too far away from the city. But because growth was coming there, those areas within 7 or so years doubled in value. So that was one of my first learnings in terms of where to buy. And it's not the glamour and the glitter of the city, but you look where the numbers and where the population growth is and what other factors, whether it's buying a unit. So I thought I would just put that as an intro in terms of some of the things that we've done well and some of the things that did not do very well. So today I'm just going to focus. I'm not going to follow the dot points themselves, but in my speech, or shall I say conversation, I will touch on a number of things and hopefully we'll find this one useful. So over the years, I then have my focus really is to, with this investment journey or property investment journey that I've been, I'm keen to assist other African Australians. That's our niche, to avoid the same mistakes, but also to learn from our experience. We have a portfolio of about 12 properties, me and my wife, across Victoria and also in New South Wales, and as well as in Perth. We're fortunate that when we bought in Mandra in Perth just over in 2024, and then the market peaked. So within 18 months, the price of that property has gone almost by 200,000 or so. But again, it points to issues of when do you enter the market. So I'm going to share from my experience, but also from my as a registered real estate agent, a professional. So there we go. Just to check, so to get us started, how many people have bought a property in Australia by themselves? How many people? You can just either raise your hand or just indicate there how many people have bought property in Australia by themselves.
Dr. Godwin, I have a poll actually towards close to the end.
Okay.
But meanwhile, as people answer this question, I can put in this question as part of the poll so we can have better data.
That's fine. That's fine. I
Yeah,
just thought
yeah.
it was just a teaser as we start. No big deal really.
Okay, okay.
So let me see whether I can go back to my notes. It was just to start the conversation. And then how many people have bought property using a buyer's agent? Because that's very vitally important, because we're going to talk about the role of a buyer's agent, and then also and the strategic value of using a buyer's agent. Okay, so I'll move on to the next. But because we're talking about property here, I thought it would be important for us to be able to start by talking about the property market itself in Australia, because I'm talking about buyer's agent. The buyer's agent works within the real estate industry, so it's basically buying property on behalf of clients. So it's also important for us just to have an overview of the Australian market. So generally, the Australian market moves in cycles. So you've got peaks and drops, and acceleration, correction, stagnation. Many of you would know that those who follow the property market, that Melbourne has been kind of like stagnated in the last 3 years or so, and now it's about to peak. All the indications are that Melbourne is in its early years of recovery, peaking, and then you've got markets like Perth, which, like I indicated earlier, that they are at the peak. Of course, some growth is expected there, Adelaide as well. But if you buy now in Perth, you're actually buying at the peak of the market. Whereas areas like Melbourne, Canberra, it's still accelerating. So then that begs the question, when is it the right time to enter the market? What is the right location for you? Is it the metropolitan areas? Sometimes people think that the metropolitan areas are better than the regionals. But currently, for example, there are some regional areas like Bendigo, like Geelong, that are doing very well, that even the rental yield itself could outpace some of the rentals, even market growth that you may get in metropolitan areas. So again, it's more about dissecting, because the market, property market is so desegmented. So you have to understand which location, the timing as well. But even within a suburb itself, you go to go deeper and check what's happening in there, because it can be varied as well. So timing, then we talk about capital growth. That is the growth in value of the asset over time. So you buy a property today, maybe in 5 years it's worth it, buy it 100,000, maybe in 5 years it's worth 110,000. So that capital growth. Then rental yield. What do you get if you are an investor, for example, you are buying a property, you want someone to rent it. So then you ask yourself, how much am I going to get a week? So you look at the annual rent that you get divided by the price of the asset or the value of the asset multiplied by 100. So that's how you calculate rental yield. And also affordability. A good property is always something that you can afford. I always believe, me and my wife always believe that we need to buy property that are affordable, that are within budget, that does not choke us, because that it's easier to build wealth that way. So we find 600,000, 700,000 properties, and those are ones we buy not over $1 million or $2 million, because we are not buying to live there. We are buying if the numbers make sense, then we go for it. All right, so that's just a current cycle in terms of the capital cities there that may be useful for some. Okay, I'll move on. So again, just some key indicators or some key factors that drive growth or that drive growth, property growth. I'm not sure why it's, let me move this. So economy, it can be local economy or national economy. When the economy is doing well, obviously people and employment, when people have got jobs, they've got more cash or money to spend. Population growth and demographics, areas that are attracting new migrants or people in the areas you may know. For example, during COVID, that quite a lot of people like in Victoria, they were going regional, some in Ballarat, and there was a surge in properties in some regional areas as people were moving away from the lockdown. So again, now Perth has been, WA has been a major attractor of a sizable number of people there. So all those factors drive growth. Of course, housing and supply demand. And we know that across Australia, there is a shortage of supply. Demand is higher, given the number of migrants coming in, and of course the even social housing, public housing is short, so there is not enough supply. Then infrastructure spending here in Victoria, we are quite familiar with the expenditure that the government does. All those help to cement or to drive the growth in property prices. All right, let me move fast and can see that. So what is a bias agent? So I was just giving an overview of the property market so that we can give context to what we want to talk about today. So a bias agent is a licensed real estate agent, a real estate professional who works exclusively for the buyer. Many of us are quite familiar with a real estate agent. Because if you rent a property, or I mean, if you have bought a property, it's most likely you've gone through a real estate agent. They work exclusively for the seller. So you find that in Australia, the buying is actually skewed mostly in favor of the seller. For a long time, there's not been a professional who represents the buyer. So you go there to the real estate agent, they talk nicely, and you feel like they're on your side. The fact of the matter is they are paid by the seller to get the last dollar out of you, to get the maximum, because that's also how they are paid. So over the past few years, there's been an increase in buyer's agents. Some put an indication around 3,000, 4,000 buyer's agents. If you compare that to the real estate agents, which are over 40,000, you can see that is still a very small industry in terms of numbers. So, okay, fact is Australia has over 15,000 suburbs, so buying can be daunting and costly if due diligence is not done properly. So that's why then you would need, or one would need a buyer's agent to assist in the buying process, because they work exclusively for the buyer. The advocate, and sometimes they're called buyer's advocates. So what are the key value or the pain points that a buyer's agent do address? Just trying to check this. It's closing my notes. Okay. So building and pest inspection, some people, one of the things that when we're buying, one of the property that we bought with my wife, we bought by ourselves. At no point did the real estate agent told us that you needed to do a building and pest inspection. Because if we don't know about it, it's entirely our fault. So, and also because a building and pest inspection can also review some other structural issues that can make and you are allowed to dispute or to cancel the contract. But it's also in their best interest for the purchase to go ahead. So yes, sometimes if you don't know what to ask and if you don't know about what you have to, then you just let it pass. Fortunately, one of the property that we bought back then and we didn't do a building and pest inspection, it didn't have any big issues. So, but a buyer's agent will help you or guide you through. They don't do a building and pest inspection, but they will inform you that you require and then engage with other professionals like building and pest inspectors that will then come and do a report and then use that report to see whether the house is structurally sound. Then also checking both corporate or strata, especially when you're buying in areas that where there are units, there are common areas. Even in suburb like where we live, there are common property. There's a gym, there's a pool, those things, and you pay a quarterly fee towards that for the maintenance of that. Sometimes if you don't check those, you may just discover that there's both corporate, there's strata there. And obviously, we check floods, bushfire risk, Aboriginal sensitivity, especially here in Victoria. Then council zoning. Council zoning is critical there in terms of in terms of um, in terms of what can be allowed and not allowed in an area. So let me just check here. We can be allowed and not allowed in an area, and also to ensure that you meet compliance. Vitally important. So when we do that, we go into council website, we look at the VIC planning and check all the things that may that you need to be aware of, and then to ensure that you are really protected. Because the planning is very important. Ensure that we meet all compliance. All right. And then also, I'm just looking at this slide, my slide, where is it? And then also check social housing. Social housing is very important, particularly for investors, even homeowners, because it does impact. There's general information or general evidence that it does impact on the perception. Areas with higher social housing, perhaps investors or owner occupiers may not be willing to buy there, So it's very important that when we do this, we actually check out what are the presence of social housing in the area so that capital growth is not affected or even rent people, so that there's lesser discomfort for some people. I'm not saying everyone, some people in coming in areas that are full of a lot of social housing. So we also check other things like vacancy rate in a suburb. If there's a higher vacancy rate, if you are doing an investment, also check why the high vacancy rates. It means you may struggle to get a tenant in. So we check all that and assist our clients. Also, land leases, what's coming up, if there's going to be any further developments there that may actually affect the supply and demand or stock on the market. Okay, common overlooked risk issues and unapproved past renovations. You need to be careful of that. So we look at those and then look at the Section 32, the contract, sheds, pergolas, and carports without permits, and any future development that may be coming in the area. Having a due diligence of that is vitally important because if you don't, you risk incurring a lot of it may be costly in future to fix those, because if you do something that is no council approval and someone thought, oh, I buy a house that was saying 4 bedroom, but someone has put a fifth bedroom, but is there council approval for that? So insurance costs, rectification orders, and legal consequences may follow. So you need to be vitally you need to be clear that those things are covered. If you know how to do it, that's fine. We're going to get to some of the points. So these are some of the points that we do as bias agents. And in other words, covering or doing all the legwork that may be required from research to, I think I left this one. I may skip this one on the pain points. So we do research, market analysis, property inspections, due diligence. We negotiate. Those are the key areas. Negotiate prices on behalf of the client. So when you come to a buyer's agent, then they conduct all that. So manage the end-to-end process, ensuring a smooth process. In other words, you are saying, okay, I'm hiring you to ensure that I avoid costly mistakes. Costly mistakes, like I noted, some of the overlooked areas, ensuring that there's due diligence. Even when you go for example, when I go to inspect a house, I've got a checklist. When I come into the kitchen, what do I look at? When I look at the windows, and look at outside the house, if there are trees, what are some of the things that we look at to ensure that the house or the property is intact and it delivers value? So you pay a buyer's agent in order to do that legwork for you. So a client or a purchaser hires a buyer's agent to avoid costly mistakes. I think for me, that's a vital, important thing. But also importantly, we do the negotiation. So you have to be very clear. I've always said to some of the clients, when I go into a house, even so, I like it so much. I don't go and say to the real estate, wow, this is so beautiful. Oh, amazing. When I'm doing that, it's actually seeing that I really like this. So they actually say, yeah, now it's a bait. So I keep the facts to myself and I wait for the time that we are negotiating a price. But I also note things that I can then utilize in order to negotiate, you know. And then I'll just go back to the first point on research and shortlisting properties. As a buyer's agent, we check both on market like domain, the listed on the real estate and also on specific agents' website. But also there are opportunities to get an off-market property. An off-market property simply means it's not been listed on the market and it's not coming on the market. The agent may want to sell it off-market without having the listing. But I've always said it does not mean that an off-market property is the best. There are many reasons why a property may be off-market. If you're not careful, someone will just say, I'm selling it off-market, because it's actually very difficult to sell it on-market. So the trap is that some people think that when it's an off-market, it means it's good. I can tell you that I've got some off-market properties that I did not purchase for our clients because it did not meet their goal. So when a client comes to us, we sit down in a discovery, understand their goal. What do they want to achieve? What is their strategy? Is it a buy and hold? Is it a bigger land because they want to subdivide? So that then guides us. Whether we get a property on market or off market, to me, then becomes immaterial as long as it meets their goal. All right, I think I've explained that. All right, and then I touched on these points, the due diligence checklist, which is important. And then we move on to the doing it alone versus doing it using a bias advocate. So yes, a bias advocate is someone who fights in your corner, like I rightly said. But there are moments, or you may feel that you want to do it alone. So doing it alone, what are the advantages? You don't pay a bias agent fee because a bias agent is paid by the buyer. Just like I said, a real estate agent is paid by the seller. So you pay the buyer, the buyer's agent to represent you, to do the legwork. Then you've got full control over decisions. Now people can just use AI, support their purchase, and then they ask AI, where can I buy? And then AI does bring some stuff, which is great. Opportunity to learn through the process. It's a learning by doing. So you quickly, or you get some experience by doing that. But there are also costs of that. You may miss opportunities because hesitation, of your unclear strategy, or simply because because searching can be daunting. You are overwhelmed with information across all platforms. You do not know really where to start. There's also a risk of overpaying for the property if you are unable to assess true market value. So as a buyer's agent, we also utilize sometimes the same CRMs, or sometimes the same paid platforms that the real estate agents utilize. So we can also have access to those. So I can actually do an evaluation, an estimate, not really an evaluation, but a proper evaluation. Generally, where does the property sits? By looking at recently sold, by looking at the trends and the suburb profile and the street and whatnot. So vitally important there. So you may also miss off market. I've already referred to that. And I do mention here that AI is helpful, but AI may also have some gaps. We like AI these days, but it can have some gaps. It cannot be when I go for property viewing, for example, I go for property viewing on Saturdays or Thursdays. I go there, I have conversations with the real estate agent. I ask what is the motivation for the vendor to be selling. Sometimes it's a distressed property, sometimes people are going through divorce, and you're actually picking a lot of intel that you can then utilize because are they willing to, would they be willing to do a 90-day settlement? Would they be willing to do a 45-day or a 30-day? How do I now structure my price negotiation, to ensure that I get the best out of for my client? Okay, and of course, AI may not tailor to your risk and family needs, and vitally important. So yes, AI is great, but you also still need someone to be local there, going to see the properties. All right, I'm conscious of time, so let me move to doing. We are still on doing it using a buyer's agent. The advantages: having a professional exclusively working on your side is important. It levels the playing field. It's like going into court, and one party is represented by a lawyer, and you are representing yourself. And I tell you that when you go to a real estate agent, the agent that comes on the ground, the whole office, they are backing them because it's in the interest of that agent. Maybe it's called Masuka Real Estate Agent, and they've got 5 employees, from the receptionist to the marketeer to the person who is coming. They're all rooting for that guy to do the best because it's their best in the. And then there you go. You go and ask them about how much would it, because how much is it worthy? Yes, they can tell you because under law they are supposed to give 2 or 3 comparable properties in Victoria, but it's still you do not have anyone who is on your side, who is ensuring that your interests are fully represented, and that's the skewed nature that I did mention. And of course, significant time savings. On average, sometimes we get in 3 to 4 weeks, we usually get our property because we do this full time now. So we are constantly doing research. I have a background in research, fully doing research, identifying areas, so that when a client comes on board, we are almost ready. But when you do it by yourself, it may take longer. And when you take longer, you may end up missing opportunities. Of course, I did mention about price negotiations. I've always said that a good buyer's agent can negotiate a very good discount or utilize their skills to negotiate a price such that you actually make a saving. Even though you pay them a sum, you still make a saving than the cost that it may take you if you don't do due diligence properly and you realize that the house is structurally bad and other things, maybe the windows or whatnot, the other thing that I did mention, or the zoning itself, or even the Aboriginal, or the bushfire, or the flooding. So all those things are vitally important. And of course, a buyer's agent come at a fee. Some of us, like myself, I do a fixed fee, but others do a flexible one where they say 1.5 to 2% of the buying price. But my point there is that for me, I think use a trusted buyer's agent who can physically inspect the property. I mean, this industry, and I've seen quite a lot of people coming in. There is interstate buyers. who can just buy property anywhere in Australia. I have nothing against that, by the way. It's my colleague, the industry. But I have not, myself, I buy properties in Victoria, and I make sure that when I buy a property, I actually go and do physical inspection of the property that we have shortlisted. And when we recommend it, we recommend it's properties that I have seen that I would say we will not buy something for someone which we will not buy for ourselves. But if I buy something that is in Queensland, in Townsville, and I have not seen it, and I do not have a colleague to see the property, to view the property, then that presents a challenge because you pay the buyer's agent to be able to do that legwork and to do the due diligence. That's where you win or lose there. If the due diligence is not done properly and you do not have a basis for then negotiating the price. So this was maybe I'll share that end. It was talking about a real estate, a buyer who wanted to buy property in Wodonga, and then they engaged a Sydney-based BA who never visited the property. And at settlement, they realized that the property was so run down because they didn't visit, they didn't see it. They were just sent video walkthrough by the seller, whom we said is the real estate agent, whom we said is working on the side of the seller. So at settlement, they were shocked to find that and they had to incur a lot of costs. So the ABC, they were just noting that it's important that buyer's agents do their due diligence, but also you are mindful or you are on who you choose to do the work for you. All right, I'm rounding up. So let's move on. I think I've covered those. Then, when is a buyer's agent worth it? Yes, it can be worth it for anyone who wants to have a representative working on their side, someone to guide and educate them. But I think those key areas for first-time property investors, we have not tested the market and do not know what are the things that to look at. Like I said, being overwhelmed with information and not knowing which one to believe or not can be a challenge, resulting in poor decisions. Busy professionals, we know we want to balance work and family, and also investment, and business. So sometimes we just need to have a professional or by your side doing the work, and then it's worth it because property is a long-term game. It's not a rich, quick scheme. It's a long-term game, and you invest a lot of money, 500,000, 1 million. Why not engage a buyer's agent, even if it costs you 10,000, 15,000, but ensure that you are doing be confident that you're actually buying a good property that is going to generate you equity over time. So then you can be able to buy more rather than not do that and then buy a poor property. Interstate buyers, if I'm wanting to buy in WA or in buying in another state, it will be good. Unless if you can go there, also to engage a buyer's agent. Rent investing is simply a person who rents a home where they wish to live while investing in somewhere else. It can again be interstate. You want to ensure that the numbers balance. When you are reinvesting, we say don't be attracted by the glamour and glitter. It's great, but remove the emotion out of the purchase. So we say, okay, your strategy, you want to buy and hold. You want to generate equity because you want to, at some stage, to draw this, and then you can buy another property. So don't buy over a highly priced property. Make sure that you buy something that has got good rental income, cash flow, so that when you want to borrow again from the bank, they don't say, this one is negatively geared, another one is negatively geared. So it reduces your borrowing power. So look at the number. Do the numbers do they add up the numbers? Is it a good location? Is it good timing in that property cycle? And also, is there good investment? Rental yield there? But we always said, don't sacrifice market growth or capital growth. That is the over rental yield. Because capital growth, when a property over 5 years, it grows, maybe it was 500,000 today. In 5 years, it is, let's say, 700,000. That's 200,000 increase. Whereas maybe you may buy that property may be costing you, let's say maybe the rental does not cover all the costs. So maybe costing you maybe let's just for argument's sake, $100 per week, which makes it what? 5,200 per year. It means over 5 years, we say 5,200 times five, let's say about 12,000. So it may cost you out of pocket by 12,000 or so as you top up your rent and other costs. But if you look at that property may grow by 200,000, you will still be better off. So capital growth is key, is important. Yes, rental yield, you need to have a good, you don't want something that strains you, but do not sacrifice capital growth or over short-term rental yield. Rental yield is good. It helps us to keep the property. But again, market growth or capital growth is more important. Okay, let me move fast. If what, how many minutes? 5 minutes. You may not need a buyer's agent if you are buying in a market that you are well aware of. You have lived in that property. Is my time up?
No, it's okay, Gordon. Continue. Maybe we'll go
I'll round
over
up here.
9 p.m. by around 10 minutes.
Yeah.
So that's
And
okay.
then if you're a good negotiator and you can do research and due diligence. So doing it alone can appear cheap, but if you factor in time, costly mistakes, and missed opportunities, you may consider hiring a buyer's agent to assist you. And when a buyer's agent is used at the right time, they can really add value. All right. Maybe as I round up, I'm just gonna give one or two examples of some of the property that we've done. The top one there, we bought it recently. It just settled. We bought it for 681. The agent there wanted 700, but when we went there and viewed it and realized how keen the vendor was wanting to settle. We also found a good opportunity for us to be able to negotiate. So we were able to they wanted 705, I think. And then we were able to strike a very good deal there for the buyer. And the rental yield for that property is about 4.74. And then lastly, I want to just highlight this. I'm not going to talk about that one. This one, because the buyer came to us and said, I want a property that has got potential for subdivision. So their strategy there was that I want to subdivide or I want to build a granny flat there. So we had to find a property like that, but also do the due diligence to check with council. I talked about zoning, about what's allowed. Now in Victoria, you may know that with the rezoning, some areas that people had bought earlier, now they're told, oh, you can build 3 stories or whatnot, especially near train stations and all that. So we had to go through council and do the checks and ensuring that it meets the goal of the client. So that we had to so that we could meet all what they plan to do in future. Now they are working on the council approval so that they can add something at the back. I think I'll end here so that we can have time to have a short conversation. But again, the key role of a buyer's agent is to stand in your corner to ensure that you don't do costly mistakes. Because in this business, there can be costly mistakes. And also, I must say, ensure that you engage. If you do buy through a buyer's agent, engage someone who is local in the area that you want to buy. If they are not, then ensure that they have a local representative or network that they work with to ensure that they actually do the work rather than for them to do it online or over the phone, because that's not what you are paying for. All right, I'll end here. Those are my details. I was going to show this slide in terms of what are some of what we notice when people come to us. Some people are just don't mind negative gearing where rental income does not cover all the costs. Some people are looking for properties that are positively geared. Some people are just wanting to do property flipping, buy, and in the short term, 2 years, 3 years, they want to sell, renovate, sell. Others, like the example I was showing, want to do subdivision. Others are saying, no, I'm just wanting to buy, but when I retire, I want to ensure that I have five, six properties and then I can sell two and pay off the other, and then I'm okay. So those are some of the examples of the strategies that people utilize, but not all. So there you go. Thanks again. I'll end here.
Thank you so much, Dr. Godwin. That was an excellent presentation. Feel free to return to any slide if a related question is asked to any slide. Before we go to Q&A, allow me to run a poll. It will take us about a minute, 2 minutes. I encourage everyone to participate. The data will help us, understand the presentation more, understand the kind of demographic that we have, so that we can even have more tailored conversations going forward. And I will share this data on the WhatsApp group so that you can also see the level of understanding, who attends these calls, and what sort of information, where they are in the financial literacy journey. So I'll launch it now. Kindly answer the questions. They are not compulsory, but I encourage everyone to fill it. Just also will be quiet for a minute or two. Kindly confirm that you can all see the poll. George, can you see it?
Yes, Rolly, just popped up. I'm just trying
Okay.
to figure out if I'm able to answer the questions. Just give me a second. I can see the questions. Just doesn't seem to allow me to. All right. Yep. Works.
It works, huh? Okay.
Yeah.
About 10 of us have participated so far. I encourage those, if you're far away from your phone, kindly answer the questions. And I will go through the results here now, once we're done. So we're approaching the halfway mark. About half of us haven't yet answered. Women are currently leading, 52% versus 48. Come on, man. One moment, about 30 more seconds. About 10 of us haven't yet answered. All right, I think we'll stop there. I'll keep the poll open, and so feel free to complete it. But just to quickly go through it, there are about 56% of us here who are females. The males are at about 44%. The age bracket is actually quite spread, but mostly between 30s and 15s. So that's the general age range. In terms of how literate we are financially, 52% of us are in the intermediate level, 24% are beginner level, and about 24% advanced. Whether somebody has used a buyer's agent when buying property, about 14% of us have used, and a majority, 86%, haven't used a buyer's agent. Whether there are property owners amongst us, majority aren't yet homeowners, 70% are not homeowners, and the rest have at least bought property. Whether we know what to look out for when buying property, about 60% of us do not know what to look out for, and about 43% at least know what to look out for. And the rest, about 52% of us rating this call at a 5-star level, and I'm happy if you can leave a recommendation on what we could improve on. So thank you so much. Now to Q&A. Dr. Godwin, if you can disclose to us, or if you can just give us a brief on how the current war has affected the property market generally, and is it more of a negative impact? Is it a short-term impact? And how will it change the landscape? Just to start us off.
Good question. I'm not sure really how the war is. Look, when people's in the short term, obviously the scaremongering and the media, when you're buying property, sometimes you just need to listen less to what the media, because today they will tell you, oh, the property market is crashing like they were doing before COVID, GST, and then people will stop doing, and then realize, oh, some areas actually during that COVID period increased in value and whatnot. So it's important to put things in context. Yes, it has affected all of us in the sense of, fuel and our economies, but is there going to be a long-term impact? It's yet we are yet to see. But again, I think if one sticks to their strategy and knows what they want to achieve, the wars will be there. Deaths will be there, tsunamis will be there. So yeah,
Okay.
that's how I would put it.
Okay. Good answer. Good answer. And on the fee that you charge, you stated that it's a fixed rate. Are you able to disclose that to us? And do you generally see the price discounts that you negotiate for your clients? Does it generally cover that? And what sort of discounts do you typically
Yeah,
get
yeah,
when negotiating?
definitely good question. So
Yeah.
our fees are based on what the person wants to do, because when you come face to us, we talk about your goals. The first meeting is what we call a discovery call. It's about understanding what do you want to achieve and where do you want us to add value. Sometimes we realize after that call that we are not going to add value in what you are doing. Maybe you've already been doing the searches and all that, and then there's no value. So if it's an exclusive agreement where we say we are going to do end to end, our fees range from 9,900, it can go up to 11,000. But we do discount for people that would have come and referred. Um, it's still very much affordable within the market range. I know colleagues that charge 15,000, 16,000 thereabout. But again, what we usually say is that it's not the fee that matters. It's about what do you want to achieve and where do you want the buyer's agent to help you. So sometimes it's just negotiation. For example, someone is going to an auction, it's gonna be a lesser fee because it's just for I don't do auctions, by the way. But again, if just negotiating the price is different from going end to end because once you start to do that, you are also going to be engaging costs. We use a lot of paid platforms to be able to do this work properly. And your other question was,
The general discount
yeah,
that
the
you
general
normally give.
discount. So,
Yeah.
so different, no, not necessarily. Yeah, we do discount people who come through Eagle
From the
Life.
not a discount on your fee on the
Yeah,
fee, but at
negotiating. Yeah.
once you talk to the vendor, how much discount do you get on the purchase price to essentially cover your cost?
Yeah, so what happens there is when we are discussing with the client, whether it's in our discovery call, we are upfront in terms of what they want to achieve and is it capital growth, rental yield, and whatnot. And then what we do, we don't say to the client, if I negotiate this much, then I'm going to discount you for this much. What we do, we have a fiduciary duty to exclusively represent the buyer. So when you negotiate there, we are wanting to ensure that they get the minimum that they have to pay for that property because we have done our valuations as well. We've looked at recently sold properties. So it's more of that negotiation. But what I can note from experience is that if you do a good negotiation, you realize that we get lower price than what one would get when they go by themselves. So you notice that even the fee that even if I charge you 10,000, most likely probably you're going to pay the peak of the end, the upper range of the price being advertised. But because that is a range, it means they can sell within that. And they can even tell you that, I've got five more people that have shown interest. We know the strategies that the real estate agents use because we're in the same industry. So then they can make you panic and they can make you be in a hurry. Then you realize, oh, okay. So sometimes we just chill and then it's negotiate and then they come back and say, oh, but we have told you that you've got an offer already. What's happening? So it's understanding that and also, being at that. So I can't give a ballpark figure, but
Okay.
what I can say is that understanding how they operate and how we can be able to equally negotiate and represent our client will ensure in most cases that we get a very significant prices that will even cater for our fees compared to someone who would have done by themselves. That's our experience.
Okay. Thank you, Dr. Godwin. Allow me to open it up now. Anyone with a question? Feel free to open your mic and turn on your mic and ask.
Yeah, I think I can follow up with a question, Rolly,
That's okay, George.
as we get other questions from the audience. Thank you for the insightful forum, Godwin. Now, I've got a quick question here, especially when it comes to investing in a good property, right? So I know a good property is definitely it means something different for everybody, right? But in case someone is looking for something like a good investment property, right? Um, I think in one of your slides you said some people will probably look at ROI, some will look at, capital growth. Now, if I'm looking at, let's say, return on investment, what is considered a healthy return on investment when you're looking at property, especially, let's say, Melbourne, the Melbourne property? And also, how do we calculate this, like an accurate ROI, considering things like, interest rates that you have to pay, and things like that?
All right, thank you. Good question. Like you rightly said, a good property means different things to different people. Again, it depends on that strategy. What your goals and your strategy, your budget, your risk tolerance. You know, there are people that buy. We usually say, "Oh, don't buy in these places where there's just one main industry, like mining areas, because when it closes, everyone will be wanting to sell." But someone who may say, I just want to go there because the mine is too vibrant, maybe 2, 3 years, I can't go in, and then the property price is too good, and then I get out, I sell, that kind of thing. So it's also depends on that risk tolerance, the investment time horizon there. But critically, I think it also depends on the like for example in Melbourne, Melbourne is at that early stage. It has been stagnated for a while. Even rentals in Melbourne are very low, and in some regional areas actually higher. So you find that it's sometimes going to be 3%, 3.5%. A good, in my view, given where the interest rates are, anything above 4% rental yield would be good, with the view that it's picking up, it's projected to grow. And then if your strategy is buy and hold, there will be some few years of pain where you have top up because of the expenses. But over time, Melbourne will do well. But you can also look at regionals as well. You find that places like Bendigo, even Geelong, which is very close to Melbourne, they're doing very well. So again, I think those points that I did mention about the timing and how long you want to be in there, and also if you've got a good buffer, if interest rates do increase, it's going to be choked, because or else go interstate. But interstate, you go there, there's massive, very good. We have a property in Mandra, and I tell you, I think they pay $720 per. It's a 4 bedroom, and I have a property in Melton. It pays 450. It's almost double, But you're also buying at the peak of the market. I'm not sure whether that answers your question.
Yeah, that at least gives at least an idea of what to look out for, and especially when thinking about the ROIs. Now,
Yeah. Also look for the land. The land, of course, land is because it's in land that increases in value.
yeah,
House the building itself depreciates. So the land company is always important. Another point that I also wanted to mention was if you're looking for a suburb, we're not going to give you all the tips here, but if you're looking for a suburb or a street, look at the owner to investor ratio. So these are some of the things that we look at. How many people in that street, obviously through the system how many people are there or are owners who live there, owner occupied versus rent. Because the challenge with the investors is that if they can all want to dispose the houses almost at the same time, you can think of how it can impact on the price, because supply will be higher. So having that balance is key as well. Those are some of the things that you can look at. Some people they always say houses are better than units. But now I was reading another article that was saying because of the changing lifestyles, people wanting to, lesser land to take care of and all this. But I think generally it's considered that houses are better value because they've got land there, and it's land that increases in value. So yeah, those factors are important to consider.
okay, thank you. Thank you for that comprehensive answer, Godwin.
Michael, welcome.
Hey, hello. Hi, Godwin. Thanks so much for taking your time to be with us today. Just at the beginning, you had a chat about the property clock, which was showing, I think, Perth, and I can't remember if it was Adelaide, which was at the top, and then at the bottom we had Canberra and Melbourne. So I'm just reflecting on the past 5 years of after COVID. Those ones at the top, they are Perth and Adelaide. They've done really well. Like
Yeah.
properties in some cases have almost tripled in value.
Yeah.
What's your thought for the ones now at the bottom, Melbourne and Canberra? Will they have a similar growth spurt, or can someone going in, because you're saying they're just starting, will someone going in expect maybe in the next 5 or so years to see similar kind of performance?
Thank you. Good question. Yes, this one I can share from personal experience. We bought a property in Mandra, like I did say, in mid 2024. It was for 590, I think thereabout. The last evaluation and looking at some of the sold properties is in that area is over 800,000 in just 18 months. And Perth has been going up. But it can't continue to go up forever. Yes, they say there's still going to be some improvement, increase, but sooner the predictions are that it's going to be leveling up. So if you are buying in those markets, you're actually buying at the peak of the market. You are paying more, for example, to enter the market. If you've got the funds, and that's fine. Some people do it and still be able to grow equity, but you can't be like someone who bought 5 years ago, or for me who bought 18 years ago. Then you come to Melbourne, again, and generally Victoria. I do work in Victoria, by the way. I'm registered here in Victoria. So yeah, that's my focus, because buyers agents can work across, some work across the country, others just work in the states that they are in. So then you come to Victoria, Melbourne, because of everything that you did mention, and also the government's land tax and other things that's happening in our local economy. It is kind of been depressed, but the projection that Melbourne always does well over a long time. So that's the prediction. No one has got a crystal ball, but that's the prediction. So to answer your question, yes, I would think that the easier, depending on your budget, the better areas to go are those where growth has not been realized. You still experience growth while we are already in the market because you've already bought. Than buying at the peak of the market, we have to pay more. So yes, I think Melbourne or other regional areas, but again, it's so segmented that we have to say, we can't say everywhere in Melbourne. Crime stats and all the other things that we did mention are vitally important to be able to then say what suits you and your goal as well, and your budget, and the term that you want to be in the market. But to answer you in short, yes, I would rather encourage someone to go where the property is at the early stages of the cycle.
Thank you.
Thank you for that, Michael and Godwin. We have a question via message. Is the fee upfront or paid upon completion on sale? And I can add an extension to this question. Is it possible to also have sort of a payment plan on the fee, say, of spread out over a couple of months or something of that sort?
Good question. So what we usually do is we have a commitment fee. Just speaking for myself, we have a commitment fee of 20%. So that commitment fee is non-refundable because the moment you come to us and we have agreed, we sign what we call a buyer's agent agreement. It's a requirement that we are required to do as per law, legal requirement so that we can act on your behalf. In other words, you are engaging us. So when you do that, when you sign, once we have agreed, you have done a brief, you say this is the property. So when you come and then we want to look for a property, 4 bedroom in these locations. This is what I'm looking at. This is what I want to achieve. We agree. I say we seal it, and then you sign. And then we require a 20% deposit, and then we start to do the property searches. What we do, we then do a strategy call. And then we start to shortlist. So we identify the best 3 properties and that we present to you in that order of priority, having done all our due diligence and everything else that needs to be done that I was talking about. And then the remainder of the fee would be paid at the time that contract is unconditional. At the moment that you sign the contract, the vendor sign the contract, you sign the contract, and then you are working towards settlement. At the same time, would have also supported with the building and pest inspection. We would have also ensuring that we continue to engage other professionals, conveyancers. So our support continues until the final inspection. So prior to settlement, we still do an inspection. Um, so sometimes, depending on needs or what someone would prefer, not we can be afford, we can discuss that. Okay, you need to pay. Obviously, it has to be paid before settlement, or the day then the when you get your keys. But usually at the time that the contract, we expect it to be paid. But we are flexible to say, okay, if circumstances do allow, don't allow it to be paid, then we can say in those 45 days or in those 60 days that you would be waiting for settlement, then it has to be. But it can't be paid after settlement. Yeah. Hopefully that answers the question.
That answers it. Thank you, Dr. Godwin. Emeritus, do you have any question?
Just to tell Godwin, thank you for the information. It's informative, and it's another step in just empowering the community and getting to learn what's out there. And I'm sure for many of our community members, it may be the first time they'll be hearing from a buyer's advocate, let alone know what they do. So so it's really good and encouraging to see sessions like this that serve no other purpose but to inform and enlighten the community in a positive way. So Asante Godwin, in the near future, perhaps we can adopt you and your wife to be Kenyans, so
They already are.
We always part of this beautiful community, and you do a lot of engaging and really empowering sessions. So I loved it. Even the one that I've attended, I was talking to one of my friends who is from Kenya. Saying, I didn't see you there. It's beautiful. You do a great work.
Thank you. Thank over to you, but thanks you and George. Thanks, George, and thanks for everyone for attending. But I really enjoyed this sessions. I learned a lot. It goes to show that in financial literacy, there's no such thing as knowing everything. You're always learning something from somebody else. It's a continuous process. So that's good to see. So thanks, Rolly, and very encouraging.
Thank you. Thank you, Emeritus. There's a quick question that has come here, Dr. Godwin. Maybe just answer it as quickly as you can. As a buyer's agent, are you able to assist in land purchase and bill later? And will you be involved until the whole project is completed?
Yeah, we lend house and then packages, yes.
Yes.
Yeah. We do that as well, yeah.
Okay, beautiful. Yeah. So Emmanuel, you've had that. You can reach out to Dr. Godwin.
Yeah, so just to make a point that, like I said at the start, the buyer's agent industry is quite new and to many people. But I can tell you there are parts of Sydney where even real estate agents, when you go to them, they're actually saying to a buyer, go through a buyer's agent because they don't want to spend time educating and guiding the buyer. They just want to do with another professional. So it'll be interesting to watch the space and what happens in the next few years. But also we need to be mindful of dodgy and people who are not registered or who just buy houses and you pay, but they actually don't go and see the house. They just do it while they're online, and then you don't see really the value in terms of that due diligence. That's the danger. But again, it's on the seller to do all that.
Okay.
Yeah, on the buyer, sorry, not seller.
I have a question.
Oh,
hello.
Somebody?
Hello.
Yes.
I have a question.
Can you introduce yourself? Yes, we can hear you. Kindly introduce yourself and ask the question.
Mimi, jina langu ni Shoaib.
Yes, sure.
Daktari, nauliza hivyo, if I were your family, what would be your recommendation or your encouragement to buy the first home owner or to go for the investment?
Sorry, to buy a home owner or investment.
Yeah, meaning that if I don't have, if if I don't have a house,
Yeah.
if I've not purchased a house as yet,
Yeah.
and now I'm ready to buy in the market,
Yes.
if I was a family, would your encouragement be to buy the house as a first homeowner or to go for the investment?
Thank you. There's no right or wrong answer. Like I said, me and my wife, when our first purchase was an investment property in Bendel East. And then a few years later on, we drew equity from that house, and we buy our principal place of residence. So there's no right. It just depends on where you are at in the stage of your life. What are the resources, the budget, and whether it's affordable. Sometimes you may say, we're talking about rent investing. You live where you want to live, maybe you want to rent there, and then you invest where you can, where it's affordable. So you may say, with this money, maybe let me go and buy in Achuca because that's what I can afford, and still be able to generate capital growth, equity over time, and then actually utilize that to buy your home. Or sometimes you say, it's better for me to buy my owner occupied house. So there's no right or wrong answer, but the number of, but those are the things that we usually discuss in detail to understand what is the goal of the family and the needs and then come with a strategy that works best for you. But I must say there's no wrong or right answer. It may work for different people or at different circumstances depending on their budgets and their, yeah.
Okay. And the other question was, in your process, hello, I've lost you.
No, we can hear you, Shoaib. Continue.
Okay, now I lost his picture. The other question was that in your process of buying the house, do you help in achieving the grants from the government?
Good question. As we focus on buying, so we don't want to go under people's page. That one is for a mortgage broker. So depending again on where you are, you can speak with a mortgage broker. They can, if you are a first home buyer, there are grants that are there depending on which state you are in, and then they can do that, a proper kind of like assessment and give you the options which bank to go with and which grants you may be eligible for. I think that the mortgage broker would be, if you talk to a mortgage broker, they'll be the best. But yes, generally, depending on where, there are government packages out there. But that's not my area of specialty. I'll just focus on the buying bit of the property. Hopefully that helps, but the mortgage broker will be very much of assistance.
So in buying a property, you need a buyer's agent, you need a mortgage broker. Are there any brokers that you need?
So I missed the last bit.
Are there any more brokers you need?
Are there more brokers you want? Sorry?
He stated there's a buyer's agent,
Yes.
there's a mortgage broker. Is there any other maybe type of broker that you need?
No, you need a conveyancer. So conveyancer does deal with the contract. So for example, if I've chosen a property and we've agreed, then we say we go to we through our conveyancer, we get the section 32, we get the contract, and then the conveyancer reviews it. To check, because I can't to check those things that we're talking about. There could be some caveats, there could be some other thing that the conveyancer can look from a legal perspective that they need to check. And then you also need, of course, a building and pest inspector. Once we've agreed the contract, and then we say, okay, we need to move forward, but ensure as part of the due diligence, let's say building and pest inspector to go in. So a mortgage broker, and then you get your pre-approval, and yeah. So those are the other two, conveyancer and building and pest inspector. A mortgage broker, you just need one.
Okay, Sante.
Yeah.
Thank you, Shoaib. He's one of our elders in the community.
Yeah, very good question, by the way.
Yeah, so we respect you, Shoaib. Thank you for attending.
I asked some of the questions for the benefit of other people who may not have asked or probably are feeling shy.
Yes, it's good.
So there's a lot to learn in this one, and it's a very intricate subject.
Thank you, Shoaib. We appreciate that.
Thank you.
Thank you. So thank you so much, Dr. Godwin. Allow me to bring the session to a close there. And thank you for making the time, for agreeing to go over and above the budgeted time. That was our 9th session, and we're glad that it's been a successful one. Thank you, everyone who's had a chance to go through the poll. If you haven't yet done the poll, I encourage you to do it. There are about 7 of us who haven't yet done that. So thank you so much, George. I'd like to give a vote of thanks. And any comments?
Yeah, so I think I wouldn't add much. I think Emeritus has said it all. So just to thank you, Godwin. I think this was a very insightful session. And as you've heard, I think this is the Kenyan community is eager to invite you and adopt you like Justin said. You've already learned a few Swahili words by the end of this forum. So you've had Daktari, that's doctor, just in case you weren't aware. But yeah, thank you very much for all that sharing all that knowledge. I think we agree that some of these things that we might take for granted sometimes it's really good to have people who are willing to give this kind of knowledge for free. And yeah, like we said before, we're going to welcome you again in the next next forums. And yeah, we look forward to having you again.
Thank you, George.
Thank you.
Thank you. KCV Chairman David Kamande, are you there by any chance? He's normally there in the background. Are you there, David? Going once. I don't think he's with us. So thank you all. It was a pleasure having you all. See you next time.
And
Comments.